Welcome back to another one of my videos. My name is Zach Pasquarello. If you're new to the channel, I'm an accountant. I own a trucking business and I share weekly updates. I started actually my YouTube channel showing my profit and loss, showing my QuickBooks, and that was just one box truck. And this year I got a semi truck. So now I'm running 2 trucks and I share every week updates on my trucks, updates on my business. I try to give tips and tricks on fuel cards, factoring, dispatching, insurance, everything related to trucks and trucking companies. But today I'm going back to my basics. I'm going to show you my QuickBooks. I'm going to show you everything about my QuickBooks. I have no idea how long this video is going to be, but I know it's going to be helpful, especially now during tax season. I'm going to show you how I manage my QuickBooks, and hopefully you all learn something.
Don't wanna sleep in, cause I got something to prove. I gotta take what I hate and finally make a move. I think of you and...
Welcome to my QuickBooks. I'm sorry my audio is terrible. I have this little microphone here. It's not the best. I usually use this microphone that I attach to my phone. I haven't figured out a way. I'm sure I could buy some microphone for my computer. I'm not a very creative person, not very tech savvy when it comes to that type of stuff. So I know the audio is terrible, but hopefully you can still learn something from seeing my QuickBooks. Like I said, I'm an accountant and I own Route 20 Trucking Company. And I'm going to spend probably the next 30 minutes just talking about my QuickBooks, talking about bookkeeping. And if you are a new trucking business owner, hopefully you can learn something. I'm going to ramble on for probably too long. So what I'm going to try to do is section individual chapters. So if you want to learn about journal entries, factoring, depreciation, loans, balance sheet, profit and loss, all those things, I'm going to try to chapter out this presentation. That way you can skip forward to whatever questions you might have about your QuickBooks. So this is my QuickBooks Online. I'll just start from the very beginning. If you don't have QuickBooks already, definitely recommend getting it. Stay away from QuickBooks Self-Employed. You can get QuickBooks Online. It's like $20 a month, and it's 1,000% worth it. So that's where we will start with the QuickBooks subscription, and I'm just going to literally go through everything that I do with my bookkeeping, my QuickBooks on a monthly basis. So over here on the left-hand side, you can see Overview, Books Review, Dashboard. I don't use those 3 tabs at all. So stay away from those 3 tabs. It's just going to make it even more confusing for you. The most important thing, the first thing you're going to do is you're going to go to your banking tab on the left-hand side here. And the really cool part is you can connect your checking account and your credit cards directly to QuickBooks so that all of the transactions are automatically pulled into your QuickBooks. Just like the mobile application on your phone for your bank or your credit card, you can scroll through that long list of transactions. The same thing with QuickBooks. It makes it so much easier to categorize your transactions because you won't have to manually enter date, description, amount. Information is automatically pulled in. But your job is not done. It's just pulled in and it's kind of floating in limbo in your bank feed. You still need to categorize the transactions. You're going to see right here rules. I recommend stay away from rules. You can set QuickBooks Artificial Intelligence to try to guess based on the amount or the description or who you're paying. They'll categorize things automatically, but I've seen it go pretty bad way too often. It's not worth it. Don't use rules. Just spend the extra 5 minutes and manually categorize your transactions. So here you can see I have my checking account. I have my credit card. I think I have 3 credit cards and 1 checking account set up. And I have all of my transactions categorized. So I have this little green check mark. But if you didn't have your transactions categorized, this is where you would do it. We'll go to my credit card here. Okay, I'm going to show you just for example how to categorize a transaction in your bank feed. It's incredibly simple. All you have to do is click on the transaction here, and you can see this is EasyPass. So QuickBooks already knows based on the description. The vendor is EasyPass. They already know based on my history, the category is going to be toll road. So they do that automatically for you. I'll talk about my class tracking here later, but I know this is for truck 001 and that's it. It's as simple as that. You just hit add, and then this will be automatically added as paying Easy Pass. The category will be toll road. That'll show up on your profit and loss statement. I'll show that later. And the classification is truck 001. For the memo here, you can add whatever you want. You can delete all of this, and you can add, the date range. You can add a million different things to the memo. You can also add attachment right here, which is super cool. Add attachment. And you can, if you have a receipt, you can upload the receipt automatically to your transaction. And then if I move my face out of the way here, once you hit add, it's as simple as that. This transaction is now added to your QuickBooks. Obviously, there's a million different transactions you're going to have flow through your checking account and your credit card, but that's just one example how to categorize your transactions. Chances are you're not going to be using QuickBooks for your invoicing because you're probably using a factoring company that's handling that for you. But I'll show you how to create a new invoice. You can do it a bunch of different ways. You can go to sales here on the left-hand side. You can go to all sales. You can choose a new transaction right here and you can do invoice. Or you can just go to the plus new button up here under customers. The very first option is invoice. Incredibly simple. Almost all of my other bookkeeping clients use the invoice feature, but in the trucking business, we're a little bit different because you're probably using a factoring company, but let's just say you're not. We'll just use, for example, All Good Logistics, and you can enter in their customer information, so their name, their address, their email. Terms, probably going to be net 30, so whatever today's date is. See, today is March 25th. The QuickBooks will automatically make the due date 30 days after today. Pretty simple. You can, let me move my face, you can number the invoice, any number you want. I have a pretty complex numbering system because I have 2 trucks. So the way I number my invoices is I'll do 002 for truck number 2, and then I'll do 2022 because it's the year, and then whatever invoice number it is. Let's say it's my 58th invoice of 2022 for truck 002. I don't know if that's sustainable, but for now, only having 2 trucks, it's doable. It's easy enough to keep track of my invoices that way. Okay, and then service date doesn't really matter, whatever date you probably delivered it. You can add a new product or service, just say sales, and then typically what you're going to put in the invoice is, just the pickup zip code, delivery zip code, and then the load number. Usually every broker requires that you add the load number into the description, and then, whatever the amount is. Whatever the amount is that is on the rate confirmation, and then I'll explain class tracking later on, but I have my 2 trucks here. So if your first truck delivered it, if your second truck delivered it, I use class tracking to keep track of my invoices that way. And then you can add an attachment here if you want to add the rate confirmation with the BOL. You can customize your invoice. I'm not going to get into the details on, customizing your invoice. And then the cool thing is you can print or preview. You can download this invoice as a PDF. So this is what you would send the broker or the shipper or the receiver, whoever you're working with. You'll download the PDF invoice and then you can send that invoice directly to them. Okay, I think that's enough about invoices because probably most of you aren't even going to be sending invoices anyway, so it doesn't really matter. Cash flow, I've never used this tab. You can generate a statement of cash flows. That's pretty advanced in terms of bookkeeping and accounting. You can look into it on your own, but I'm not going to go over it right now. Expenses. So I rarely use this tab because, like I showed you before with the bank feed, you're going to categorize all of your expenses directly through the bank feed. But if for whatever reason you need to manually upload an expense, you can go here in the plus new tab and then hit expense. And there's 2 types of expenses, really. There's expense and then there's bill. So an expense is something you've already paid for. This is things that are going to be flowing through your checking account, flowing through your credit card. These are very straightforward. Okay, who did you pay? Advance Auto Parts. You used your credit card. On what date did you pay them? Very basic things here. Don't worry about payment method. You can fill this out if you want. It doesn't really matter. Reference number, don't worry about that. If there is a reference number associated with the expense, maybe like an order number, you could put that in there, but don't really worry about it. Tags, I never use tags. You can if you want. I wouldn't worry about tags. And then the category. This is going to be, where do you want this transaction to show up on your profit and loss? Just think intuitively. What did you buy? Where did you spend your money? That'll help you categorize your transactions. Advanced auto parts, probably going to be either repairs and maintenance or job supplies. They're kind of similar in our situation, but for this, we'll just categorize it as repairs and maintenance. So whenever you look at your profit and loss statement, because you're categorizing this transaction as repairs and maintenance, it's going to show up. This is going to add to your profit and loss statement under repairs and maintenance. And I'll show you a profit and loss statement in a few minutes. Description, this is for you. However detailed you want it to be. We can just say antifreeze. The memo, once again, as detailed as you want to be. You're not going to be sending this to anybody. It's not like an invoice where you're emailing a PDF copy. This is just for your own personal notes. You can add an attachment here. I like to add receipts to all my transactions. You can too. And then the amount, just whatever the amount was, $55, and then the class. You're probably not using class tracking, but I am, so I'll add the class in there. Now, this is something I've already paid for, but like I said, you don't really need to worry about doing this because all of the transactions are probably going to flow through your bank feed. So don't worry about creating expenses this way. It's just going to make things more confusing, and it's going to be a lot more time if you're manually entering your expenses. You don't need to. Just use the bank feed. I hope that didn't confuse you, but I just wanted to show you real quick what it is to enter an expense. Similar to an invoice, okay? Like I said, there's two different expenses, quote unquote expenses. Similar to an invoice, somebody owes you money. That's accounts receivable. Now we're going to talk about a bill, an accounts payable. You owe somebody else money. Maybe your fuel card, maybe your driver, maybe your dispatcher. This is a bill. Right under here, under vendors, we're going to create a bill. Now, I'll be honest with you, I don't even use bills because I just keep track, because my business isn't that complicated. So I don't need to keep track of my accounts payable through my QuickBooks. I have some clients who have like 20 vendors and they need to use QuickBooks to keep track of their accounts payable. So every Monday I get my bill for my fuel card. I could technically create a bill on Monday that's due in 7 days. And then once I make that payment, I could just mark that bill as paid. That's just an extra step, and it's not really necessary because my business is pretty simple right now. So you don't really need to worry about bills unless you really want to, if you want to make things more complicated, I guess, or if you have multiple vendors and drivers and contractors and dispatchers and fuel cards that you have to keep track of. But it's the same concept as an expense. You'll create a bill. And just like an invoice, invoices are due in 30 days, so too might be your bill due in 30 days. So I'm going to owe Advanced Auto Parts, just for example, in 30 days. I'll make the bill as of, let's just say yesterday, so 30 days from now it's due. And the same thing with the expense. You can categorize it, you can make a description, the amount, the class. And this, you'll see over here, Payroll. I love QuickBooks, great accounting software. I do not love QuickBooks Payroll, and I recommend you don't use QuickBooks Payroll. It's okay if you have one employee, but as soon as you start adding 5, 10, 15 employees, it gets very complicated because the payroll software is completely integrated with the accounting software. If your payroll software is messed up at all, everything gets messed up. Same goes with the payment processor integrated directly with QuickBooks. I recommend you don't use it. Like I said, I love QuickBooks. They're a great accounting software, but I do not recommend integrating their payroll or their payment processor. Time, they also have like timesheets and time entries. I don't use that. Reports. Okay, I'll talk about reports last. Taxes. I'm not going to click on 1099 filings because it has all of my vendor contractor information and I don't want to put that up on the screen. But with 1099 filings, you can file your 1099s directly through QuickBooks. Super simple. Super easy, cheap. You can do it yourself. $3 or $4 per 1099. So next year in January, I recommend you use QuickBooks to file your 1099s. Like I said, we'll talk about reports last. I want to talk about two more things here. Accounting, chart of accounts, and reconcile. There are 3 steps to bookkeeping. You categorize your transactions, you reconcile your accounts, and you generate your profit and loss statement. Very basic, very simply. That's how bookkeeping is broken down. So you categorize your transactions in the bank feed, and then you reconcile your accounts in QuickBooks. This is the most important step, and this is often the most overlooked step. You're going to want to reconcile your checking accounts and your credit cards. Very simple. You take your bank statement at the end of the month. So February 28th, take out your bank statement and you're going to see beginning balance and ending balance. Take that ending balance. So we'll go to my checking account here. Take your ending balance as of 2/28/22. So for me, it was this 19,000, and then the date 2/28/22. Whatever date is on your statement. Just be careful. Some banks don't always end on the last day of the month. Just check your bank statement. It'll tell you the closing date of the bank statement. What we're doing with reconciling is we're making sure the same amount of money that was in your bank account in the beginning, plus all of the deposits, minus all of the withdrawals, equals the ending balance. So beginning balance plus deposits minus payments equals ending balance. This is penny for penny, making sure everything matches perfectly. This is so important because QuickBooks is just a virtual representation of your actual checking account. So we want to make sure everything matches perfectly. The only reason the balance on your QuickBooks won't match your checking account is if you've entered in checks that have not cleared. So if I write a check today for my dispatcher, send it in the mail, and he doesn't get it until April 1st, and then he deposits it into his checking account, I will have subtracted that amount of money from my QuickBooks, my bookkeeping, as an expense in March, but it has not cleared my checking account until April. Kind of a confusing topic. You really need to see it to understand it, but if you're having that issue, hopefully that makes sense. So once you've finished your reconciling, once everything lines up, matches perfectly, you should have a green check mark and a $0 difference. That means from your statement balance to your QuickBooks balance, there's a $0 difference. You want to do this every single month for your checking account and your credit card. And you'll just hit finish now. And that's how you reconcile. Okay, now I want to show you your chart of accounts. Same thing, same spot under reconcile. Right above, we have chart of accounts. Think of a filing cabinet. Think of your trucking company's accounting filing cabinet. Inside of that filing cabinet are individual files. So the whole filing cabinet is your chart of accounts. Those individual files are repairs and maintenance as an expense, your checking account as an asset, your truck loan as a liability. So inside your chart of accounts, you have assets, liabilities, and equity. All of your assets are your cash assets, your checking accounts. You can see here your bank, accounts receivable, inventory, your trucks, and then your liabilities are your credit cards, your loans for your truck, and then your equity would be owner's investment, owner's pay, retained earnings. So at the end of the year, any net income you have left over at the end of the year gets transferred to retained earnings. So every year thereafter, your retained earnings will just continue to grow as your net income continues to grow. And then after you have equity, you have income, sales. Pretty straightforward for us as a trucking business. We only really have one avenue of revenue. That's just trucking sales revenue. And then you have all of your expenses in your chart of accounts. There's not really much else to say. It's kind of an obscure topic, but it's really important to understand your chart of accounts and to keep these clean, because these line items right here, these will be what show on your balance sheet and your profit and loss. That's what I'm going to get into right now, but you want to make sure these make sense. There is no right or wrong technically way. I mean, once you get into like big manufacturing companies and big corporations, yes, there is a right way to organize your expenses and your income. But for us as a small trucking business, you just want to make sure this makes sense to you. That way you can analyze your data and understand, where am I spending my money? Am I spending too much on repairs? Am I not spending enough on my driver? Just make sure your chart of accounts makes sense to you so that you can read, interpret, analyze your data, and make informed decisions. So here you can just very quickly see I have driving, hotel, lumper, fuel, advertising. I mean, the list goes on and on. I could even go to the next page and I have a bunch of expenses, and I'll show you how that materializes into a profit and loss statement in a couple seconds. Last thing I want to talk about, I want to go over reports. So like I said, the first step of bookkeeping is categorize your transactions. The second step of bookkeeping is reconciling your accounts, making sure penny for penny, your checking accounts and your credit cards, everything matches perfectly. Now we go to reports, and 2 reports you want to focus on. There's actually 4. So if you've got a pretty big company, it's complex, you might have accounts receivable and accounts payable. QuickBooks makes it super easy to keep track of those things as long as you are accurate and on top of maintaining your invoices and your bills. So if you want, from here, you can run accounts receivable and accounts payable, and you can see, okay, who still owes me money? Okay, who do I owe money to? But if you're a pretty small, just one owner operator, you probably don't need to worry about accounts receivable and accounts payable because you probably have a factoring company that's managing your accounts receivable for you. So I wouldn't recommend trying to track that in your QuickBooks and your factoring company at the same time. That gets messy. So we have two things here. We have the balance sheet and the profit and loss. So your balance sheet is going to show you your assets, your liabilities, and your equity. Let's just look at it right now. This is my balance sheet. So your balance sheet is just a moment in time. It's not a period. It's not from February 1st to February 28th. It is everything up until February 28th. So there's no way of isolating just 1 month on your balance sheet. It's kind of a confusing topic, but here you can see your balance sheet will show you the amount of money in your checking account, the amount of money in outstanding accounts receivable, your assets like your truck. So you can see here my truck 1 is my box truck. I purchased it for $21,000. Truck 2 is my tractor. Purchased that for $63,000. Accumulated depreciation. Let's take a look at that real quick. So as you know, assets depreciate, and we need to track depreciation every single month. You can do it at the end of the year, or you can do it every single month. So box trucks depreciate over 5 years. Tractors depreciate over 3 years. You can also do Section 179 or bonus depreciation. I'm not going to get into that. I definitely recommend ask your CPA about bonus depreciation and Section 179. But for us, we're just going to take straight line depreciation. So we're going to take the purchase price of the truck. The box truck was $21,000 and some change, and we're going to divide that by 60. So every single month, I record a depreciation expense, basically. So this is going to show up on your profit and loss statement, $360 of depreciation expense. And yours is probably going to be, between $500 and $1,000 every month, depending on how much your truck was. Just take the purchase price of your truck divided by 60. And what's important here on this journal entry is that you also need to credit accumulated depreciation. So this depreciation, and this is getting pretty specific, bear with me. Depreciation is an expense, shows up on your profit and loss. Accumulated depreciation is an asset. Technically, it's called a contra asset. It's like the opposite of an asset account. So we have our trucks on our balance sheet, and then we have this contra asset account of accumulated depreciation, and this decreases our assets. So we have $360 here of accumulated depreciation and depreciation. And the way that looks on your balance sheet, negative $4,000. So this is basically taking, truck 1, and then we subtract from that $4,000, and this is what's left over after we depreciate our assets. I hope that makes sense. Okay, enough with the assets. Now we move on to liabilities. Accounts payable. Like I said, I don't use QuickBooks to track my accounts payable. I have 3 credit cards in here, and this is just your outstanding balance on your credit card. So as you know, you take your credit card, you swipe it, and you're charged, $100 at Advance Auto Parts today, but you're not paying that off until next month whenever your credit card is due. So that balance accumulates, and so at any given point in time, there will be an outstanding balance on your credit card. You want to reconcile that, and you can always check it out on your balance sheet. Almost done here. We have credit cards are like a current liability. So a current liability is something that is going to be resolved in less than 12 months. A long-term liability or a loan is like, a car loan, truck loan, a mortgage. These are loans that will not be paid off for over a year. So most of your truck loans will be long-term liabilities. We have here $9,000 still outstanding on my box truck. And I didn't really take out a traditional loan for my tractor. I just took out a line of credit because it was near impossible for me to get a loan for my tractor. So I just used a $45,000 line of credit. And so here, this is the outstanding balance on my truck 2 loan, and this is the outstanding balance on my truck 1 loan. So for your balance sheet, assets equals liabilities plus equity. So if you see here, I have $105,000 worth of assets in my trucking company, and then total liabilities is $66,000. So there's a lot that goes into this equation, but just know that $105,000 equals $66,000 plus equity. So we move down here, we have our total equity of $38,000. So I've invested $44,000 into my trucking company. Last year, I had a loss of $18,000, and this year so far I have net income of $13,000. This net income we'll talk about shortly on the profit and loss statement. Don't worry too much about retained earnings because that's an automatic calculation that does in QuickBooks. Just know that your net income is based on your profit and loss, which we'll talk about in a couple seconds here. But this owner's investment, anytime you put your own money into your company, that is considered owner's investment. So if I use my personal checking account to buy a pallet jack in the very beginning, that would be owner's investment. If I take $5,000 from my personal checking account and transfer it to my business checking account, that is owner's investment. That's not income. Although it's money you're receiving, it's not income. It's owner's investment. That's the balance sheet. Really important that you keep a clean, organized, up-to-date balance sheet because as your business grows, banks will want to look at your balance sheet to see if you're eligible for loans and funding. It's really important that you have a clean, updated balance sheet. Also, your CPA is going to want to look at it for filing your taxes to make sure depreciation is done right and loans are accounted for properly. Last thing we're going to talk about is your profit and loss. If you remember in the very beginning, I talked about my class tracking, my classifications, and I have two different trucks. So every transaction that flows through my books gets classified as either truck 1 or truck 2. And this is really important because this enables me to monitor profitability of my different trucks. If I just categorize everything as sales or repairs and maintenance or fuel or driving, I will have no idea if my box truck is profitable. I will have no idea if my tractor is profitable. This tactic probably isn't sustainable. Like once I have 5 or 10 trucks, I probably won't worry about it too much. But my first couple years, while I'm tracking all this data, while I'm trying to even decide if my trucking company is going to work or not, I want to understand the profitability of my individual trucks. Let me zoom in here a little bit for you. Here we have my profit and loss. So a bunch of different options here. First of all, you want to make sure your accounting method is cash because just trust me, I don't want to get into it, but just always make sure this accounting method is cash unless you are accrual basis, in which case you'll know what to do. But chances are if you don't know your cash basis. Okay, so here we have our profit and loss. The cool thing about QuickBooks is we have a bunch of options. So we can filter it by date. So we can do last month, or we can do last year, or we can look at this month. And then, like I said, I have my classes up. So I'm going to keep my classes just so I can show you. And we will we'll do two things. We'll look at the bad and the not so bad. So we'll start with last year. So as you all know, my trucking company is new and not very good. I'm a great accountant, but apparently I'm not a very good trucking company owner. Get a lot of comments all the time. I understand I might not be doing things right, but I'm learning and hopefully it's getting better. Okay, so truck 000. As you know, this was my 18-foot box truck. Total catastrophe disaster. Got rid of that truck, upgraded to a 26-foot truck. A little bit better, but still not great. I don't really know what information you're hoping to get out of this. I'll just go through briefly. This was my sales, not too bad. This is like 3 months worth of revenue, $68,000. The big issue that I had here is that I paid my driver way too much, and I've scaled back how much I'm paying my driver. So he's making, $1,100, $1,200 a week, which is still really good income, but I was paying him 55 cents a mile. If I have one recommendation to you, I would go, if you're paying a driver, I would go percent of revenue. So I would pay your driver 20 to 25% of revenue, depending on how good he is. I pay my driver 22% revenue and $375 guaranteed every week. So, and that's typically just to cover hotels. So $375 is to cover hotels. And then the driving here, you can see my driver in 3 months of working made $25,000, which is a pretty good job. So this is what I was talking about, the chart of accounts. So you have here advertising and marketing, bank charges, and the list goes on. You can look at all of my expenses here. The numbers are probably pretty meaningless to you, but I just want to show you what my profit and loss looks like. So you can see here, how much I spent on insurance, how much I spent on repairs and maintenance. So the really cool thing about this is from an internal management, analyzing your data perspective, you can see, okay, I spent $8,000 on repairs and maintenance. And you can go back and see, okay, how many miles did my truck drive? And then you can take that percentage. So if your truck, quick math here, if your truck drove 80,000 miles, you spent $8,000 in maintenance, all of a sudden you can plan next year, okay, I'm probably going to spend 10 cents a mile on repairs and maintenance. That's why these things are so important. You want to keep track of your expenses in real time. That way you can plan your cost per mile Plan your budget moving forward. So, the specific numbers don't matter, but just what really matters is that you're keeping track of this information. Tolls, same thing. I typically calculate my tolls based on a percentage of miles driven. So you can take, okay, how much money did I spend in tolls? How many miles did I drive? And now you know for next year how to plan. I sold my truck, and I lost $1,700 when I sold my truck. This is my depreciation that I captured from my 2 trucks in 2021. Lost $20,000. So not very good. As you all know, I had a very rough start, and in December I had a bunch of accounts receivable that weren't collected on truck 1, and I make up for that this year. So this was not a very good start. $20,000 down the hole, but I didn't drive a single day. I didn't drive any loads. I didn't dispatch my truck. I didn't really do anything. That's kind of the whole point of my business, is to not do anything and try to make a small profit. We'll see. It didn't work in 2021. Fingers crossed. Let's look at the data. Hopefully it works in 2022. Okay, so we'll switch to this year. This is the last thing I'm going to show you. Switch to this year and we'll see how the numbers look. Hopefully it's a little bit better. Okay, so as you can see here, I got rid of truck 0 and now I just have truck 1 and truck 2. I got truck 2 in the middle of February and it's already catching up to truck 1 because it's a semi-truck, so it's going to just make a lot more revenue. This number is pretty cool. So this is one of the big advantages of a trucking company. We will be able to leverage a massive line of credit based on our revenue. If all goes according to plan, I'm going to plan on grossing about $50K a month. And with that, you should be able to get a pretty sweet line of credit. And with that line of credit, you can do whatever you want. Cash flow, buy a house, buy a rental property, buy another truck, get rid of your factoring company. You can do a lot of cool things with a line of credit. Open up a brokerage. So there's a lot of options here. Driver. Yeah, I don't really want to waste your time. I'm not going to get into the specifics here other than, let's see, what is it? Staffing agency. I paid my staffing agency 58% markup on all of my driver wages for my tractor trailer just because it's tough to find a driver. Okay, so here's the bottom line for, let's see if we can see it. Yeah, so far in the first 2.5 months, really only 6 weeks of running my tractor, things are looking up. Things are looking up positive $11,000 this year, primarily due to the tractor. But none of that matters. The whole point of this presentation is just to show you the power of keeping track of your books in real time. I highly recommend you do it. Get QuickBooks, keep track of your books, leverage the data, obsess over the data, make educated decisions. Don't guess, don't hope for the best. Look at the numbers, budget, calculate your cost per mile, plan for the future, and hopefully you can grow your trucking business.